Hi, my name is Michelle Holmes. Welcome to another edition of CMS Forex News. Today is Tuesday, May 6, 2008. The Reserve Bank of Australia held rates steady at 7.25%, saying that growth in domestic demand should subside as higher credit costs put a clamp on consumer spending and business investment. Inflation, however, will be high in the short term, but is expected to cool as aggregate demand slows. The move was highly anticipated, and the accompanying statement did not veer from the market's expectations neither. Australia's trade deficit shrank to 2.74 billion Australian dollars, a good sign for the Australian economy. It was led by exports growth, which climbed to 4.4% on hungry demand for iron ore, coal, and other raw materials, especially from China. For April, growth in the UK services sector slowed to the weakest pace in 5 years. The services PMI slipped to 1.7 points to 50.4, much lower than what economists expected. The decline came as a result of more restrictive access to credit for both households and businesses, coupled with a weak housing sector. In the Eurozone, the final version of April's PMI increased to 52 from the preliminary release 2 weeks ago. It was 51.5 in March. The Eurozone, led by strong growth in Germany, recovered from its dip in January. Activity in Germany's services sector also improved compared to its initial release, climbing to 54.9, a 6-month high. Eurozone producer prices increased 0.7% for the month of March, matching the upwardly revised figure for February. The annual pace picked up to 5.7%. Prices, as they have been all year, are being pushed up by energy costs, which affect all stages of the production process. The data showed that the Eurozone is withstanding a slowdown better than the UK. The Euro-Pound pair climbed following the releases. The pair is up about 100 pips since falling to a 6-week low on Friday. The Euro gained 130 pips on the dollar from its overnight low to set an intraday high around 1.56. The European data is consistent with the ECB's current stance. Inflation remains a problem, and the services sector seems to be faring well. In New York trading, the dollar was pressured by oil futures climbing to a new record price of $122 a barrel. This pressured the U.S. stock market as well as the dollar. The dollar-yen pair fell, corresponding to a weak open in U.S. stocks. The pair fell 100 pips from its overnight high to set a low near 104. As New York trading progressed, U.S. stocks recouped some of their opening losses, and the dollar paired about half of its earlier losses. Consumer inflation in Switzerland increased 0.8% on a monthly basis and 2.3% in annual terms. The annual rate cooled from its 2.6% pace in March, undershooting the forecast of a 2.4% increase. The Swiss franc was gaining overnight and in New York trading against the euro and dollar. Asian stock markets mostly retreated while the European markets tumbled. Risk aversion boosted the Swiss franc. As U.S. markets began to recover, the franc almost gave up all the overnight gains on the euro. In Canada, the Ivey Purchasing Managers Index, which follows spending by companies, surprised forecasts on the upside in April. Though the 57.6 reading was lower than March's 59, it was higher than the consensus forecast and was a bright sign for the Canadian economy. The Canadian dollar strengthened, followed by the strong Ivey PMI. Record oil prices also gave the loonie a boost. The U.S. dollar-Canadian dollar pair lost 125 pips after the Ivey PMI release and is hovering slightly above parity at 2:40 p.m. Eastern Time. Tonight, the UK starts with consumer confidence data and follows that overnight with industrial and manufacturing production and its BRC shop price index. The Eurozone reveals retail sales while Germany releases factory orders. Tomorrow, the U.S. will post data on labor productivity and costs for the first quarter, along with pending home sales and consumer credit. The afternoon will see New Zealand's unemployment report. That wraps it up for today in Forex News. Join us here again tomorrow at cmsfx.com.